Hey, fellow investors and fellow stock guardians. It's Wednesday, January 20th, 2021. I'm Hoda, co-founder and CEO of StockCard, and here is a recap of today's noteworthy movements in the market. The peaceful transition of power to the Biden and Harris duo went well on Wednesday, and all three indices moved upward slowly and steadily throughout the day. It was a calm political day without any economic indicator reports. The market took a breather from volatility for at least one day. As we said, Wednesday was a good day for the market. Many of the usual high flyers ended the day higher than where they started. Most stocks I'm following on the My Pick tab on the Discover page were in the green. But the one stock that surprised me the most was Netflix. Shares of Netflix were up more than 16% on Wednesday. The company announced its latest quarterly earnings report, and to the surprise of most commentators out there, it managed to grow its global subscribers by 21.9% last quarter. That was enough to send the stock price soaring. The question that keeps popping up in my mind is whether Netflix is worth investing in at the current price. Hold on to that question for a few minutes and let's talk about the loser stock of the day, and I'll get back to that question with more information. Shares of Jumia Technologies, ticker JMIA, were down by more than 4%. If you're not familiar with this company, it is mostly known as Amazon of Africa. Similar to Amazon, it brings online shopping and delivery to several African countries. Also, similar to PayPal or Alibaba, it provides mobile payment to African consumers. The stock has been growing rapidly from the low of a few dollars when it was shorted by some of the most well-known short sellers such as Citron to more than 40% a share, with still a large percentage of its shares available for trading shorted. Today's stock price fall is not due to any specific news, but when the stock price grows so rapidly in a matter of a year or so, a few percent up and down is not much of a surprise. Now back to the Netflix question and whether the stock is worth investing in at the current price. No one is surprised if I say, before today's price jump, Netflix's stock was priced quite aggressively. The company's price to earnings ratio was 91 before today's jump, which means with the current earnings, it would take Netflix 91 years to make enough money to justify its current valuations. At the same time, if you look up the company's stock card, you can see that the stock price valuation box is in yellow, which means the stock is fairly priced. How is that possible? If we use the average of the last 5 years price to earnings ratio and multiply that by the current earnings, the estimated stock price is more than double the current price. That's one reason this stock is still fairly priced, at least based on mathematical calculations. But does Netflix have the kind of operations to support double its current price? One fact that supports such a bold claim is what the management shared in the latest shareholder letter. Netflix management believes the company can now have a consistent free cash flow generating operations and no longer needs to raise new capital, even though it plans to produce one new piece of original content per week. That means the long-lasting bear case against Netflix that was about the company being heavily in debt and needing to keep raising capital to continue to grow is no longer valid. With that analysis, I plan to do two things. Pick up a few shares for the gift for a toddler portfolio that is a real money custodian portfolio for my niece and nephew who have at least 2 decades before they are allowed to touch the investments in that account. So Netflix gets enough time to dominate the global entertainment scene before my nephew and niece can cash out. Secondly, I'll add Netflix to my watch list for 2021 to pick up shares when the stock price falls during an eventual short-term fluctuation. Before we wrap up, let me remind you of a 10% promo code exclusive for you guys. If you'd like to give StockCard VIP a try, use promo code ROLL with our CEO in the promo box and get a 10% additional discount on your first monthly or annual subscription. You still get your 14 days free trial and then a 10% discount after that. Research as many stocks as you want and follow successful investors' portfolios and get updates and regular new investment picks and ideas. Promo code Roll with our CEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.